I think the China reopening story is just far and away the biggest oil demand story out there. I think that, China, of course, is just coming out of lockdowns. The direction of societal behavior is going to be really key, particularly post-Lunar New Year. The bottom line here is that China is going to be buying a lot of crude over the course of the next several months. We have to see the market tighten physically. We haven't seen that yet. But once it does, I think the bottom line here is that, again, going back to this story where the supply side is going to continue to stay relatively tight, supply is going to be relatively tight over the course of the next several months, quarters, and years. And as such, I think the demand side doesn't have to be really, really strong for prices to go meaningfully higher, through $90 a barrel, approaching $100 a barrel in the second half of the year, by our view. So I think the key idea here, supply is going to stay tight. Demand doesn't need to be particularly strong. It just can't be weak. And supply and demand balances globally will still stay relatively tight.
And Michael, if China's going to be buying a lot of the oil that it needs from Russia, what kind of impact is that going to have on the price cap? And I'm wondering what you make of the decision by the G7 to push back their review of that original price cap by a month to March now.
Yeah, look, I think that there's a lot of different moving pieces here. I mean, when you look at the December 5th EU embargo on Russian crudes, I think the key idea here was a lot of people looked at this and said, this is just going to be a rewriting of crude flows on a global basis. If Russia can't sell as much to the European Union, you're going to turn around and you're going to try to push more into places like a China, push more into places like in India, where we've seen India take a lot of discounted crude over the course of the past, call it 11 months since Russia first started invading Ukraine. So the bottom line here is that the crude side of things, you have seen barrels just rerouted. I think the key idea to watch, or the key theme to watch here, is February 5th, where the EU is going to wean its way off of Russian refined product. That's going to be a different story because Russia cannot just turn around and try to push more gasoline and push more diesel into China. The reason being is because China is a net exporter of refined products. So there is going to be disruptions in terms of Russian refined product trade flows. The only way for Russia to really rebalance their refined products is really for refinery utilization to go lower, which could at some point lead to Russian crude production output falling. But I think the key idea here is over the course of the last 11 months since Russia first invaded Ukraine, a lot of traders have looked at this and have been taken on this roller coaster ride. The key idea here for traders to really deploy risk into this Russian narrative is Russia's really become a show me story. Show me that barrels are actually rolling off before key capital actually gets deployed back into the market. So I think that's a lot of things to think about, a lot of moving parts. So Russia is, of course, really, really integral to the story, to the oil story again in 2023.